Yeah, then hello to another very, very interesting interview with a lot of questions from followers. A lot of people talking about Twino. For me, a very interesting platform, and I was, of course, before at Martin Sulte, CEO from Mintos, yeah, and he asked me what were the first platforms you were invested in. Twino was, of course, one of the very, very first platforms years ago. I started investing in P2P. So my heart is also in Twino, yeah, to be honest, and we know each other since last year. We know each other from communication earlier, but last year we made an interview. So please, for all our viewers, watch this interview maybe before, because I don't want to repeat everything from the last year. I think it's about the updates, what changed to the last year, what changed in the financials to the last year. This will be in this interview. So check the interview. I will put the link to the video in the description. And we also made an office tour last year, so we don't need to do it again. I think there is no big changes, or?
No big changes, I would say, no.
It looked pretty the same when I arrived, yeah. I just was very easy at the entrance, yeah, but I found it finally. And so I think we can start with some new questions. Maybe you can just really, in 2 sentences, introduce yourself for people that just start here, but then we go into the new questions.
I guess I will just briefly talk about Twino.
Yeah, maybe, but only a few sentences, because long one is in the last interview.
Okay, so my name is Roberts. I'm leading the Twino investment platform. Regarding Twino, so we are one of the peer-to-peer lenders that comes from Latvia. We are doing pretty good. We are among the top 3, top 5 in continental Europe, based on the monthly funding volumes. Around 17,000 investors nowadays that are active, monthly volumes 15 to 20 million euros. I mean, what else? That's pretty much the main thing.
I think that's the main thing, that we can get to the new questions. And the first question, of course, is connected to this. What has changed in the business, in the P2P lending business maybe, and at the company since our last interview? Is there any main change, maybe some new rules in the government, or what has changed? Can you tell me something?
It's a good question. So I mean, there's no general huge changes in the industry, I would say. As we spoke last year, I think at that time we also discussed regulatory environment in the country. So I would say that not much has changed in that regard, but there are some direction. So hopefully we can discuss that later. I guess there was a question on this.
Okay. So then.
But on the company level, so we just launched an SME. Just 2 months ago, something like that. We launched SME product, so small to medium enterprise financing, which is new for us. So we launched it in Latvia for the lending business. And we are also offering those loans now on the platform. So you as an investor can now, apart from the consumer loans that we had in the past, you can also invest in those business loans.
I see. So this is kind of business loans, that was what I wanted to ask. And of course it's, I think, good for diversification, but I think it's less return. The rate is lower.
It's 8% right now.
8%.
But I mean, we'll see. Maybe we'll change something based on the supply and demand situation, right? So just recently we launched the very first cashback campaign on Twino. So
I saw it on the platform.
You so can get 1% of a weekly bonus for investing in Latvian loans, which is pretty decent, I would say. 1% on a weekly basis is a lot. And other parts on that, we just rebuilt our auto invest so it would work most fluently, so to say, so that investors would invest more frequently, so that there wouldn't be basically a case when a big investor comes, buys out all the market, and then it's so now it's spread more evenly, I would say, among the investors.
I see. Okay, I think we'll come to some points later through the interview, just to get into it right now. And there is one question I just figured out for myself, to be honest. I'm interested in that very much. What is the mother company of the platform? Because we talk about Twino, but I think there is some holding or something,
I can discuss the structure, I guess.
Maybe please, yes.
So Twino, basically, it is a mother company of our whole Twino group, but it's a Latvian, in English terms, LLC, so limited liability company, which is a Latvian entity. And it has basically a couple of things, what it is mainly doing. So one thing is investment platform, which you know. Then the second thing, it's a sort of a mother company for all the others. So the group, the main company inside of the group, and it also is a sort of a headquarters for us, because we have main main departments here that are helping out all of the other lenders that we have. And Twino is the one that is owning all the other lenders that we have. So for example, in Russia we have multiple entities and two lending brands. Then in Latvia we have just one lending brand, which is also a daughter company of Twino. And so it goes across all the markets that we have, and Twino is making this sort of happening across all the markets. But the interesting part is that Twino is not a lender, so it's just a company that sort of receives loans from the originators and then sells those loans to investors. So we are the company that's in between the borrowers or the lenders and the investors.
But at least in the mother company, also the borrowers, also the loan originators, also from this Twino.
Yeah. They have different entities. So for example, in Latvia we have brand Moneza, so it's a separate LLC, but it is owned by Twino.
Owned by Twino, so everything is at least in the holding.
Yeah.
In one holding, yeah.
Yeah, and that's something that we will issue, I guess, I hope in a month. It's a group financial statements, because we just recently issued standalone statement for Twino, which is the mother company, and then we also issued the group financial statements just to give a sense of what is happening with all the entities, because Twino is just it's a function of the whole group.
Yeah, yeah. But for the buyback, it's secured by the holding, by the mother company Twino, or?
It's secured by LLC Twino. So Twino is the main company.
The main company, by the main company.
Yeah.
So
but then again, it's a group. So we have we are. Okay,
so I think I get the kind of feeling for it. Yeah.
And the regarding shareholders, we have just one shareholder. It's Brox. I think last year you saw him, but I guess today.
Yeah, it was last year.
He's not in office, but he's the one sole shareholder who's owning 100% of Twino.
Okay, that's interesting. So it's all his okay, that's interesting. Yeah,
he was the one founder already many years ago. So it wasn't Twino back then, but it was launched in 2009, and then we rebranded.
Okay,
now it's Twino. Then it was called Finabay, if I'm not mistaken. It was the old company name, group name.
So it's interesting that just one person is the owner of the whole company. At least. Yeah. Okay, I think it might be interesting to make exchange about this fact with all the viewers, because I don't get so many questions in this camera movement at the moment. I think it always takes some time to figure out new questions about this point. But I'm happy about the exchange. Let me know what you think when you watch the video about this fact that only one person is the owner. Is it good? Is it bad? I don't know at the moment. Mm-hmm. But I think it's interesting to get different opinions about that.
Yeah.
Okay, so maybe we can continue.
I guess there was a question regarding the one exception is one of the companies in Russia. So one of the brands that we have there, it's called Ezayom. Okay. It's a Russian lender, so online lender in Russia, and it's owned. I think 50% is owned by Brox and or Twino, and 50% is owned by another person, which is again a Russian businessman that is doing business in Russia, and part of the business is also one of the brands with us.
Okay, yeah. Maybe one additional question I just get out of this interview right now. Do you think is it a risk that only one person is owning the whole company? For yourself?
For myself?
For yourself and the point of view of an investor? Because usually, it's a holding and there are a lot of shareholders, It's just different, but what do you think about this?
It's definitely easier. So I would say that the main benefit, it's easier to make decisions. So because if there's 5 shareholders, for example, 20% each, then it's like you have to vote for each of the decision made. In this case, we can really react faster, move faster, and just make the things that we want. And at the end of the day, we have still a management team that is consulting him and some other advisors when it's necessary. But I think it's easier just easier for this person to sort of make business decisions and then not to ask all of the involved persons to vote on.
I see. I think we will come to this point also later in the interview, but maybe we can continue with the next questions, because I got a lot of questions about my thoughts, my opinion of the last financial reports and the losses of the platform. I'm of course interested about your opinion, because a lot of people are of course worried about the financials and the figures. What is your opinion on the last reports? Maybe you could also make a short summary interpretation for our viewers, because although I'm not a financial expert, so I don't really know how to read figures, to be really honest, also to the viewers. So maybe you can just make an easy summary, what happened.
Sure.
What I found out that a lot of people is of course worried about these losses.
I think that the main thing to understand is that those losses were back in 2017. So it was the financial statement of the business in 2017, which was quite a challenging year. We launched in operations in Spain, Mexico, then we tried out a couple of markets, and we also launched an installment loan, which is really capital intensive product, because you basically you lend a lot of money, and then the term or maturity of the loan is really long, and you receive the money back quite slowly, and then the risk scoring and credit scoring takes a lot of time and a lot of capital, and that's what we did in 2016, 2017. In some cases it wasn't that successful, and that generated the losses, and then we sort of have converted the business back in 2018, which is the last year, and we also have issued the latest financial statement of Twino, so the LLC company, and it is profitable already. So we had profitable 2018 with 3.7 million in profit. And another thing that they have been talking about is the equity position. So equity position is basically how much money or capital has the company, and whether it's not losing because of the losses the company is facing. And it was negative for 2017 for Twino, this separate entity, LLC, but it was still positive for the Twino group, which is so
2017 was profitable for the group, for the whole.
No, it wasn't profitable, but the equity position, which is one of the most important positions, was positive. I guess it was around 10 million euro, which is quite a lot, while we had some losses. And now in 2018, we are being profitable both on Twino level, so LLC, which is already out there, available on our website, and was shared, I guess, at the last month, somewhere there, and we'll share also the group financials, I hope for the end of June, but realistically I think it will be July, because we still have to get it signed, talk with all of the companies that we have, and it will be even better with more than 7 million euro in net profit, so it's after taxes. So we are doing a lot better than back in 2017, which was a challenging year, and we sort of restructured the business, understood which were the mistakes made, and since then we have it. Okay, so profitable again. Yeah. And the outlook for 2019 is also... it's good. Well, we have... we have management reports on a monthly basis. So basically those are reports made by the finance department where they see the main figures and the end of the bottom line, net profit, and we are doing really good also this year. So okay, perfect. I think this is a lot of viewers will be happy to hear that. Okay, so just have to get to the next question. Genau. Me as an investor, for me as an investor, it's interesting to get an high rate and high return. And the last years, of course, it was a decreasing return. I think on Twino we are about 10% right now. So all in all, my return, and I will say 10% is the minimum for me because of risk and everything, and also there are some other possibilities to invest the money, so it may be more return. So what can you tell us about the plans to increase or decrease the rates for the investors? As you said, we have been testing around with different interest rates. For example, now we have 8% of interest for Latvian loans, and that's something that we see that the supply and demand is starting to match not that good. We see that there are some loans that are not being bought, so it is something that we are thinking about, and it might be changed at some point. But regarding the previous interest rates, we are basically seeing that the demand is there. So for the investments, around 10% of interest, which is well, if you compare to anything, really, really high, except cryptocurrencies, but then again, so
it's a different topic,
it's something different. So in general, it's pretty nice return, and I think that the main benefit for the investors is that it's really passive. So you go on the platform, you set up your auto invest, and then just invest. You don't have to spend that lot of time to sort of analyze each of the loan, because you have to look at the company, whether the company is doing a good job, and it just makes it easier, I think.
Okay, so increasing, decreasing in a few words?
We'll see, because the Latvian loans, that's the issue that we are seeing right now. We might increase for Latvian loans, but for others, I mean, pretty unlikely.
Okay, so 10% around.
Around 10%. Yeah. I think that it's really good rate, and what we are seeing, it's really a psychological level, because a lot of investors are, as you said, are going for those 10%.
Exactly.
But it's hard to know, because it's a round number. It's a one thing. But then again, I think if we look at it, well, globally, then 10% is really high return. If you look at the stock market, it's fluctuating, and you can lose a lot of money, and stable 10%. I think it's really good.
That's absolutely true, but there are of course some competitors,
and other
platforms, and
that's why we.
I just come from another one right now, and they have about 12%.
Definitely.
So
that's one thing that we are trying to work on and building the trust level to make investors sure that they're really safe to invest at Twino. We'll have financials out. We'll talk more about our loan originators to see, well, basically to offer the investors the possibility to see that we are doing a really good job. Okay, we had some mistakes in the past, but who doesn't? And then again,
it's also learning.
And we had that experience, which is really useful right now. So we are pretty sure that we are doing a really good job, and that it's pretty solid what we are doing. So
I think so too.
Yeah, well, that's what we'll try.
Okay, perfect. So I think now some questions maybe from the followers. I just got it in the last minute, so I'm not sure if you're prepared about everything. I wasn't as well, because I just got it yesterday night and today in the morning. But one question is, and I think it goes in the direction we just were talking the last sentences, from Angelo. Angelo asks, what's the advantage of investing on Twino compared to Mintos, where you can diversify your investment much more widely over countries and loan originators, and of course even have a little bit a better rate of return.
Yeah, I mean, again, it's very interesting, important to understand that they're a bit different business structures. We are still both peer-to-peer lenders, but in our case, those are our loan originators. Well, in Mintos, it's a marketplace with a lot of originators. So in our case, I would say the main benefit is that fact that those are group companies. So in the end of the day, we know everything about the companies. We at Trina are making the decisions in any market we are in, whether to do something or not to do, whether to have certain interest rates, whether to do something with the default rates. We are controlling the situation at the end of the day, and we know what is happening in those markets. So that's a really big benefit for us, that all of the originators that are on Twino are our originators, so we are really certain that, well, if something is going badly, we know about it. It's impossible to hide something or make it a secret, because it's our companies again. So, and then we have one shareholder who's always interested in being profitable in each of those countries, and platform is a really important part to get the funding to those companies. So I would say that's the key thing, and I think we will do more and more to talk about, well, just to gain the trust of the investors, just talk about why it is safe, why our originators are doing really good job. For example, our Latvian originator, it's targeting near prime segment, pretty much the same that the banks are targeting. The interest rates for the borrower is getting lower and lower. The product is really good, but I mean, probably we haven't communicated that too actively to investors, and we'll work on that a bit more. Okay, thank you. I think that's your answer. And I'm also again happy for exchange about this. What is your opinion when you watch the video? I think you can ask questions or send you, and you can transfer them to me, and we'll be more than happy to answer. Perfect. Thank also you. Regarding financials, because I have heard that there are some questions regarding financials, and we will have as well. But yeah, I mean, if there are any specific questions, you can ask, and we will answer.
Okay, I will forward it to you and then
of
course. So you can just put it under the video and then maybe you also can comment it or whatever. We will find a solution for that. Very good. So Angela also asked, are you profitable? We already covered this, I think.
Yeah.
What would happen? This may be another interesting question. What would happen with investors' money if Twino goes bankrupt?
Mm-hmm.
And I think in this case also for me it's an interesting point because it's only one shareholder. So what if, I'm not sure if I spelled the name correct, Almond Brooks?
Almond Brooks, yeah.
Almond Brooks, yeah, okay. Is it right this way?
Yeah.
Pronounce it, yeah? Pronunciation, this is the problem. Almond Brooks, okay. If Almond goes, we don't hope so, of course, yeah, and I wish him always the best, yeah, I wish everybody the best, but what happens if he as a person goes bankrupt?
Yeah.
And what happens if the company goes bankrupt with the money of the investors?
Yeah, well, I mean, I don't think that there's a case that he can go bankrupt with a company not going bankrupt. So if the company goes bankrupt, then probably he would also go bankrupt.
Okay, because it's all risk in one person, of course, in this case. No?
Yeah. But generally speaking, if the company goes bankrupt, it's a pretty straightforward process in Latvia, and I would assume that it's pretty much straightforward across the Europe. What is happening? There's an administrator who is responsible for basically giving the money from, in our case, borrowers, so the persons that have taken the money from our loan originators back to investors, who is basically the persons that are giving the money to us, Twino Group. So, and another important factor there is that, to make an example, for example, let's take Poland. So in Poland, we have loans that we are issuing to consumers, and all of the consumers, even if that entity, loan originator, goes bankrupt or Twino goes bankrupt, the borrower still has to repay the money back. Yeah. It doesn't matter whether there is company or not. The liability for that person is still there, and even if everybody goes bankrupt, then he still has to cover this. And if he's paying the money back, then the administrator who is responsible for this bankruptcy case will transfer the money to investors, and they will receive money. Of course, there's possibility that the borrower defaults or some part of the borrower defaults, but then again, an important thing is that we are charging higher interest rates to borrowers than the interest rates that we are paying to investors. And if there's no Twino, there's no entity that is keeping the profit, and then the interest rate that is basically charged to borrower is also a property of those investors. So even with default rates, investors should receive more or less the things, the money that they have invested. They might lose something, but it's definitely that they will not lose 100% because, to be realistic, borrowers still have to repay the money. It's not disappearing.
Very interesting topic. I try to, also for the viewers, it's always a little bit difficult for me as a person because I try to follow everything you say. I try to think about the next question as well at the moment when the camera is on. I check if it's working, and so and my language skills are not so good maybe. I try my best, but I try to follow everything, and I just have follow-up questions. I hope my English is good enough for that. But what I wanted to ask you, so the liabilities from Twino are separated from the connection between the investor and the borrower.
Yeah, well, what is happening in our case, Twino is a company that is basically buying the loan from the loan originators and then selling that to investors. So, for example, Polish loan originator, a company, we have a couple of brands there, NetCredit or InCredit, but they are receiving the monies back from the borrowers, and they're giving the money out to the borrowers at the very beginning. And then there's this liability for the borrowers. And then they're transferring this loan to Twino platform, and investors are coming in while investing their funds, and Twino, as an LLC, has liabilities against the investors. So, for example, we have liability against you, and we have to repay the money. But if Twino disappears, then there's no company, right? And that's why there will be a person, an administrator or a company that is taken in this bankruptcy case, who has to deal with all the liabilities of Twino, and they have to try to make all of the, for example, investors happy by distributing the money that Twino should have received from the borrowers. So basically, the borrowers are still repaying their money, so they have to repay the loan, and if part is not repaying, that's okay, that's fine, because the interest rates charged to borrowers are higher than that we are paying.
That's also the margin to make profit, of course, and to secure the loans and everything. But my question is at the moment, and maybe it's only a language problem from my side, so sorry if it's that, but I want to go into it. So, for example, if Twino goes bankrupt, to follow Angelo's question, when the money comes back from the borrower. Just simple for me, for a stupid person like me, and this bad English. So, and then my point is, when the borrower pays back, is this a direct connection to the investor? The money goes in and goes directly to the investor in the case there is nobody between right now, or is it going to Twino, and in the bankruptcy they will have a lot of liabilities also to other persons,
But not that many. Not that many. For example, in Twino, our balance sheet basically, the biggest liability part is against investors by far. It's basically we're not attracting funds from anywhere else. So in the case of the bankruptcy, like 70 or 80%, I'm not sure, I have to check the balance sheet, but generally a lot will go to the investors.
But and there is no direct connection.
They have direct connection through those assignment agreements that we have with investors. So when you invest in a loan on Twino platform, you have an assignment agreement, which is basically an agreement that you have a claim against the borrower that is, for example, in Poland. You have a direct claim against the person, and Twino is the middleman who is basically controlling the process, charging some interest from the loan originator, etc. But you, as a person, you have this claim against one specific loan. It's a partial claim rights because you are not receiving all of the interest or penalty or etc. what the borrower is paying, but it's fixed to 10%, for example. So you have the loan, and Twino will pay part of the interest received from the borrowers to you. But you have direct claim against the borrower.
So I have direct claim, and if there is anybody else who has claims about Twino, will not get the money from this contract.
No.
So I will get the direct back the separated money from this loan I invested in, and it also depends on each loan if it's performing or not.
Of course.
So if I have a lot of, just for a simple example, it will not be that simple, but just to make it simple, if I have a lot of performing loans, I will get back more money maybe, and if I have bad luck and I have a lot of non-performing loans, in case of bankruptcy of Twino, I will get back less money, of course, because it's directly, the claim is directly to the borrower and each loan. And there is not between another claim from another maybe.
Well, in one loan there's usually more investors, for example.
But it's between the investors. Only the investors, and not maybe a claim from another bank or whatever.
We're selling the whole loan is being sold to investors, and then investors have partial claim rights, not because they are partial owners of the claim, but because of the fact that we are fixing the interest rate. Because we don't want to give all of the money back to investors, but we are okay with paying 10% of interest for investors. And I guess that's it.
Of course, the loans are different interest rates. Now we're changing a little bit the topic, because I think we go away from the bankruptcy right now again, because we hope it will never happen in this point. From this case, so it would be, of course, a lot of different interest rates, but you put nearly all at the same rate. So you just cut it and say, okay, all loans from Poland are at maybe 10% or whatever.
That's what we
But at least at the end, there would be one 12%, one 20%,
of course,
one 40%, whatever.
Different interests, and also different cases. For example, one loan can be extended, so the borrower can decide, okay, I don't have the money today, but I want to extend the loan for a month or something. And there also will be some penalties if the borrower is late with the repayment, and of course just the regular interest payments that are just as for any other loan. But interest rates might also differ for different borrowers on different terms. And
you cut it at least, and the investor gets usually the same rate.
That's how it works.
And also for the delay, you don't pay a penalty or something to the investor, I think, because it just gets his rate continued, and that's it.
Well, that's what we're doing. We are paying a constant return for investors. For example, even if the borrower is being late for 15 days, we are still paying for those 15 days to investor, and that's part of the credit risk that we are taking on ourselves. But we are okay with taking the credit risk, and investors are okay with that because we are paying some interest to them, even if the loan goes in delayed status or it's defaulted. Then the buyback comes in. So we're trying to make it as passive as possible for the investors, as straightforward as possible.
And I think there are two kinds. There is the buyback guarantee and there's the payment guarantee. Yeah. And the payment or payback or payment guarantee is you pay when it is delayed. You pay it like.
I can talk about that. Well, the buyback guarantee is generally for the short-term loans. So if the loan is 1 month long, then it's going to be with buyback. If the loan is longer, we will give the payment guarantee.
Okay.
And the difference with the payment guarantee is that, well, for example, buyback, it's triggered in the 30th delay day, and then we are just buying back.
You buy it back and I get the interest rate also for the 30 days, yeah?
Yeah.
So for the day as well. I get it for the whole time, but for the whole time the same rate.
Yeah. That's what's happening at the buyback.
Yeah.
The payment guarantee is a bit different. We are having it for the longer term loan, and the main reason for that is to avoid cash flow issues that a company might face. And that's part of the things that I mentioned about 2017, why it wasn't the best year. So, and afterwards we introduced also this payment guarantee. And the main thing how it works is, for example, let's take a loan with 24 months, with maturity of 24 months. It comes with the payment guarantee, and let's make an example that the borrower defaults on the 4th month.
Yeah.
So in the real life, it means that with the buyback, we should give the money back to the investors because there's a default
whole amount,
and the whole amount. So, but in real life, we are not receiving anything from the borrower, which obviously is a pretty bad situation. They're giving the money, but you don't have the money. And with the payment guarantee, the key difference is, okay, we are not getting the money in the 4th month, but the investors are not getting the whole money at the 4th month as well. We are just continuing to pay the interest and principal according to the initial schedule for the loan that was set at the very beginning. So it's 24 months, we will continue to pay for the 24 months, and by doing that we are avoiding a huge cash flow issue at the 4th month, but we are just spreading this unlucky case
to all the others again,
and that really helps
to execute it or whatever. And,
because for longer term loans, buyback is it makes things like this happen, and then there's this cash drag in between. It might get quite big. I mean, if the portfolio is huge, there will be cases when people default before the very end of the term. So,
I see. Okay, now I think I understand it better. And one last question, this topic, and then I continue with Ursi's questions.
Okay.
Just understand, but with this payment guarantee, for me as an investor, I get it on the scheduled time, the payment.
Yeah.
So I don't see any delay in the repayment, or
you see status change. The status will change.
Yeah, but the payment day?
No, you will just receive the money according.
Sorry, Mr. Boost, yeah?
Jā.
Okay.
Mums bija citā kaut kādā laikam, jā.
Es nezinu,
Pagaid, zini, kā es apstīšos, man jau ir kaut kāda istaba, tikai man te ielika. Tu vari iet uz pirmo.
Okay, then let's continue to Ursi. Ursi asks, in the financial statements, standalone, page 22, I don't know about this because he's much more in figures obviously than me.
Yeah.
You disclosed 22 million euro loss from sale of consumer loans, I think he means.
Yeah.
Must be a typing mistake. After what period of non-payment are those loans sold? What is average discount on nominal when sold?
Yeah, I saw.
Did you get the questions or
Yeah, I understood the idea, and I think for this question it's really important to understand the structure of Twino. So Twino is not issuing any loans. We are just buying the loans from the loan originators that we have in some country. Let's take Poland again, for example. Poland loan originator is issuing 2 million a month, let's say, and then those 2 million is transferred to Twino, and then investors can invest in those loans. So we get 2 million from investors, and originator then gets those 2 millions from us.
But at least it's all owned by one company.
Yeah, it's in the middle, so Twino is the company that is doing these transactions.
Yeah.
And that's a part when we come to this point. And at this point, it's because of the buyback. So because of the buyback, this is something that happens. So in 31st day of the loans being delayed, we are basically buying the loan back from the investors, and still transferring the money to loan originators. So loan originators are buying back the loans from Twino, but they're buying back the loans with a discount because the worth of the loan has decreased. It's being late, and they will sell it to other companies, most likely, because they are specialized credit companies that are buying the unperforming loans.
Yeah.
And that's why the companies are buying the loans back on decreased value, and that generates a loss for Twino. For example, if there's a loan of 1,000, investors has invested 1,000, we are giving back the 1,000 to investor, but the loan has decreased in value because it's being late. And then the loan originator is buying the loan back, for example, for 300 euros because that's the price. And then it creates a loss for Twino for 700 euros. But in reality, there's no specific business loss for Twino in this case. It's just because the price of the loan has changed during this time. And then the loan originator is selling the loan later or just doing some debt collection activities to get the money back. And yeah, somehow like that. And in this position, that's why it can't be positive at all, because it will always be a loss for the buyback, because we as a company with the buyback are losing some money, but then there are other positions that are compensating those losses.
Okay, I see. Then I really don't understand this question, to be honest, but maybe you understand it.
Okay.
The increase in equity mainly results from a revaluation of Ethereum,
that's one of our lenders in Russia.
which you hold 50%.
Yeah.
Who is your partner in that investment? What is the reason this revaluation?
So one of the reasons why the equity position for Twino increased is that we re-evaluated the worth of one of the loan originators.
Yeah.
And I would say that's a pretty standard thing to do because, for example, in Russia we have two loan originators. Both of them are quite big. One is Moneza and the other one is Ezayom. They're performing well, and we are among the market leaders in Russia, which is obviously, again, a huge country. And what we did, we re-evaluated the business there, and the company as a loan originator, Ezayom in this case, became more valuable. And that, of course, gives also value to the shareholders, so Twino and then Armans, because the company now is more valuable and also helps the balance sheet. So it's basically that. And regarding the 50%, yes, that's the only lender that we have that we are not owning completely, but just
I think what we were talking about before.
Yeah. And the other person, I think that there are two shareholders, Armans, and another person, which is a Russian native. I don't know the person personally, but yeah, Armans has had a business relationship with the person, I guess, for 5 years or something like that, and they're just doing business together.
Okay, I see. Great, I think that was a follow-up questions. Then I continue to one question from my side again. And I think it's a really hot topic, and I discussed about it with Martins before in the last interview. It's about this new regulation in Latvia, and maybe it's also a new topic in this case, that Latvian registered P2P platforms need an electronic money banking license or something similar to that. Right. Pretty soon, yeah, and investors might become their own banking account and IBAN, which probably gives a lot of new opportunities for more services. But do you have plans about that, and what would be your solution on this new rule by the government? Can you give us some information about this?
Yeah, I can comment. Well, yes, there is regulation coming. Well, it's not really new regulation, but the regulator of Latvia just wants that all of the peer-to-peer platforms in the country become regulated, and they are giving basically two options to do that. So you can be investment brokerage company, or you can become a bank.
Okay.
So one of those, you have to pick one of those two, because they are not creating any new regulation specifically for peer-to-peer lending, but they are saying that you have to try to adjust to basically do those two licenses. And regarding the payment institution, it's a separate license. I know that Mintos are doing that, but that's just a business decision. It's not really the same as the ones that the regulator is asking for. But yeah, to give some information on that topic, we are in touch with the regulator. We are aware of those things, and we are doing sort of the restructuring, not really restructuring, but the best decisions to convert the business to being regulated, because that's always has been one of the goals that we are trying to achieve. We have, together with Mintos, we have gone to the industry meetings with an association, with FCMC, which is regulator of Latvia, and then Ministry of Finance, just to try work on the regulation, on a specific law for the industry. That wasn't really successful, so now we are going in the direction of the existing licenses that are basically available in Latvia. It might change the product a little, but we'll do anything possible to make it as simple as, well, not to change that much, so that investors wouldn't really feel that there's that big change. But the biggest bonus, obviously, or the benefit for investors is that the platforms most likely will become regulated in, I don't know when, hopefully in a year or something, and it's obviously a security layer for the investors as well.
Okay, so you are in the line with this, and what is the deadline? Do you know that?
There's no specific deadline.
Okay.
There's just ongoing discussions with regulator, and each of the platform, I would say, well, at least most of the platforms are going to individual conversations with the regulator, and then they're setting deadlines in some of the cases, in some of the cases not, and yeah, it really depends on case by case. Yeah, and I mean, to additional, they're doing this payment institution license, I guess, in Lithuania, and yeah, but that's just a different business direction, I would say.
I see. So, but there is no danger for investors in Twino that there will be a problem, and maybe by regulation of the
we have always
been, or whatever. So
no, we are in contact with regulator, and we are trying to work out the best solution possible by going in regulated space.
And you're in time with that, and it will be no problem to find a solution until then.
Definitely.
Okay. Great, then maybe we can just go to the last questions. How do you see the future of the company?
Bright.
Okay, that's good.
Yeah, well, as you know, and basically we can continue on this question, because one of the things across basically Latvia and all of the Latvian platforms, those are peer-to-peer lending platforms, right? And that's something that might change, so that the platforms might become more as an investment vehicle, so just an investment platforms that are offering, for example, as a part of the offering, similar investments as of now, and maybe add some additional financial products that you can invest in. I mean, ETFs, bonds, etc. So other type of investments, and I think that's the direction that many platforms will go, and that's something that we are definitely also considering, to also offer different kind of options, because what we have been hesitant to do is to add a lot of loan originators on the platform, but to keep to our loan originators that we know really well, because when we add new platforms originators, we obviously have to do a really good due diligence to be sure what's happening inside of the companies, because we don't know them. And it's quite sophisticated business. There's a lot of things that you are doing or not doing. For example, scoring, like risk departments, is really important part, and you never know how good they are at that.
Yeah.
So yeah, and that's why we have stick to the model that we have, and we might be offering some new type of investments in the future. At least that's the direction that I would like to go to.
Okay, I see, and maybe you already covered it a little bit, but maybe some thoughts of you for how do you see the future of P2P lending in general?
Yeah, again, I think that it will be.
It's already covered a bit, but
and if you're looking at Latvia, or I mean, maybe in Estonia it's a different situation, but at least in Latvia, I think it will be sort of a consolidation of the peer-to-peer lending. It might be transforming to some other financial instrument, but again, I think for investors it will be still really nice deal. It will still look really nice, and it will add new level of security or trust to them, because the platforms will become regulated in Latvia, at least in the coming years. So I think that it really helps for the investors.
Okay, so this sounds for a bright future, and we already did 45 minutes. It's crazy, but it's so interesting to talk to you, to be honest. Yeah, I really I'm completely stick to it. Every word. And thank you so much for your time. Thank you so much for all the information. It's always a pleasure to come here. I will be back in anyway, I'm sure. I like Riga, and I like visiting these very interesting companies, because I think at least, of course, we already know about it, and also the viewers know about P2P, but at least I think we are still early movers in this fintech in general, because it's really a new kind of investment, and it has a lot of advantages, I think, because maybe it's also one very last point, I'm sorry for this long interview, but I think that might be an advantage for you with having everything in-house, at least with another company, because there is also a lot of IT behind, and a lot of intelligent software, and I think it's easier to connect all the software in one company than to get all these payments in different loan originators from different companies. I think it's easier to have everything in-house.
Of course, there's benefits, and of course there are also some advantages to not having that. But I mean, the benefits are pretty straightforward. You can control the situation. You see what's happening. Also, technical side, as you said, we have monitoring tools that just gives us an alert if something hasn't happened correctly. We are not receiving loans or etc. So things like that. So
it's everything in-house, and I think that's also at least general and a big advantage of this fintech and P2P, that you can make so much with the intelligent software, and this saves a lot of money, of course, compared to maybe traditional banking, because in traditional banking, if somebody has maybe takes a loan, it pays maybe 12% or more, but on the bank account for the investor you only receive maybe 0.5% or less, even less right now, because everything between is just needed for all the stuff and everything, and all these offices and everything, and now we have just a software that brings together of course the borrower and the investor, and saves a lot of money. That makes it very interesting. Okay, great. So let us know what is your opinion on all that. I think there is a lot to discuss beyond this interview. A lot of very interesting exchange, and I'm really looking forward to that. Thank you for your time.
Write your questions. You can, I guess, contact us directly or through Bernhard, and just contact, ask.
Perfect. And we all can learn about it, and especially also I learn a lot about it, also about this exchange. So thank you for that as well. Thank you for your time, and looking forward to see you next time.
Yeah.
Thank you. Goodbye. Goodbye.